Hello, Maverick traders, and welcome out to your daily currency recap, where we're breaking down today's market price action and talking about our upcoming 24 hours ahead. Let's get into it. Let's break down today's market price action. As always, take a look at broader market analysis, bring it down to our currency basket, see what's really moving, and talk about possible setups. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at a market analysis here, let's just jump right into the headline. So the markets are now retracing from that last week's pullback. So we are in this transition phase where markets were one way for the most part in November and December. Last week was a pullback in the equity markets, and a lot of the things that were weak did rally. So we are noticing so far, just 2 days into the markets this week, we are seeing the markets tend to recover. So we're really still in that transition phase where are we about to make a lower high and a lower low, or are we about to make a breakout from the previous high? I think that's something yet to be seen. Outside of that, bond yields and the US dollar remains range bound. So they're not really breaking out one way or the other. So it seems like markets are just in that holding pattern. Now let's take a look at the currency market movements today. As you can see, it was not an exciting day. The biggest movement was at 0.30% in the US dollar, 0.26% to the downside in the Swiss franc and the Aussie. So again, this is not a good trading market conditions. And you want to be staying away. You want to be waiting for where these big movements are happening. Today, again, not one of those markets. Now, if you take a look at outside of the currency market, now let's take a look at the broader market. So you can see the S&P down slightly, World Stock Index down slightly, gold, a slight movement. We had a nice movement in the oil, and crypto down. So you can see that not really getting a big push in the broader markets that would really give us a breakout in the currency market. Now, in the crypto world, you can see things are just going back and forth. The Bitcoin have been doing well, but it did pull back today. So is the Bitcoin Cash. So there's this inconsistency in the currency market. Overall, Bitcoin is definitely the leader here. But again, a day like today, you can see the Ethereum was the best. But I always like to say, follow the trend, follow what's moving consistently over time. Now, let's go into our outlook. And our outlook, again, remains the same at a +2 to +3. You can see that how we just did pull back last week. We had 1, 2, 3, 4, about 4 or 5 days of a pullback. And we did close below this 20-day moving average. Now, here we are, got a nice little candle yesterday, and staying positive. So this is why I said we're in the transition phase. We have a clear resistance level at 4,800, and we have a clear support level at 4,675. So again, at this point, until we get a breakout up or lower, we are not going to treat this as a trending market. This, again, turning a little bit more into sideways. So breakout strategy, if it breaks above the support or resistance, but right now is kind of right in the middle here. So this is where you got to be really cautious on your trading strategy and the confirmation for those breakouts. Now, as we look at the schedule, we know that the starting Thursday and Friday going to be a busier schedule because we get the U.S. inflation data. So remember, this inflation data moves the market. It moves the bond yields. It moves everything. So you still have to really wait for this number to come out. You can see the expectation. It's not that off, but again, you're seeing a slight little increase here. But remember, the biggest movement comes when there's a big change or the numbers are off the expectation. So that's really the only thing that I can think can really move the markets. But outside of that, we don't really have a whole lot of catalysts. So market could just go sideways till we get some more data. So let's just jump into our currency analysis and see what's moving. Now, looking at our velocity score, one of the things you notice is that there's nothing in that +3 to a -2 or -3 area. A lot of the things are stuck right in the middle. Remember, this is not what we want to see. We want to see things more moving one way or the other. So a lot of the things are now going sideways. CAD, Euro, Dollar, Yen, they're kind of going sideways. We are seeing relative weakness in the Aussie. And it seems like Swiss franc did pull back today. And we're seeing good patterns in the pound, and Kiwi is definitely doing better than the Aussie. So these are the correlations that we can pay attention to, but realize that a bunch of the currencies are sitting right in the middle. So let's just jump into the charts and take a look at any possible trades ahead.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So now let's just jump into the daily charts. I just want to highlight that where we are. Last week, we got a nice little push to the upside in the dollar, but look at that. We're going sideways here. So that's why I said we're going a range bound here. The dollar, range bound, CAD, range bound, the euro going range bound. You can see even the pound is, after a big rally, it's just taking a pause here. And taking with the yen, although it did pull back here, making a nice little low base or a little bit of rally, but overall it's still in a sideways trend here. So you can see where things are more sideways, you really have to factor that into your analysis and to your strategy. Breakout strategy is not working that well right now because things are just flip-flopping back and forth, one day up and one day down. Again, this is not a conducive market environment if you're looking for a big move or a big breakout. Again, big moves happened last week where we had pound to the upside, we had the dollar to the upside. Now, most of the things are going sideways. So what do you do in these environments? Well, the best thing you can do in this environment is be on the sideline. You can set some orders out, especially if things break out one way or the other. You can see how Kiwi is sideways, but again, very inconsistent. So don't expect this to be the best performer suddenly. It needs to really go higher and break out. So I have a lot of these things that are kind of going in my list here. But again, look at the pound here. Had a rally. It's going sideways here. So not a conducive environment to jump on this as well. I like the euro, but you can see I'm not jumping on euro as well. Things are going sideways. So in the sideways market, you really have to take a look at markets day by day. Meaning we can be a buyer one day and we can be a seller one day because things are just moving back and forth. It's not moving in a constant manner like how it was here, where day by day it's just moving in one way, or day by day it's moving lower. That's where you get an accelerated move. Realize that we're not seeing that. So again, this is only the second part of this weekly this year. So again, we have a lot of room ahead. Again, right now, market is in transition phase where you're just deciding really where it's going to go. And the big question is, what's going to be the catalyst? The catalyst could be broader markets, catalyst could be inflation data, or catalyst would be central banks that are starting to come out in the coming weeks ahead. So just keep that in mind. We are not moving in a fashion where you can ride a move for a longer time, but have a range defined here. And if it does break out one or the other, I'll be more than happy to jump on. But right now, I would say stay in cash and maybe perhaps wait for the right opportunity, which could be again for the US CPI starting Thursday. So this is again time where you're going to get chopped up both directions and you can really compound your losses. So avoid that, stay in cash till you get a better idea on what the market wants to do. So in conclusion here, range for price action. So let this be it. We'll wait for when things break out, play relative strength weakness, and make sure you have a proper position sizing. This is the time where if you are getting more losers than winners, if you're getting a losing streak, this is where you need to cut down your position size, maybe take it 1/3. This is where you would need to doubt a lot of these movements and be a little bit more cautious and go in a capital preservation board, because when things go back active, when things are really breaking out, that's really where you want to be active. So thanks for joining. Stay patient and keep the discipline going. Cheers.